Tampa Bay was America's golden ticket. A metro of 3.2 million where home prices rocketed past $450,000 and bidding wars erupted on modest suburban houses. Retirees and remote workers flooded in by the tens of thousands, chasing sunshine and opportunity. Now, just 3 years later, the dream is unraveling. Prices down double digits in key neighborhoods. Inventory surging by 40%. And Governor Ron DeSantis is scrambling to contain a crisis that threatens to crater one of Florida's most vital economic engines. How did Tampa Bay go from boom to bust so quickly? And what's driving the governor's increasingly desperate attempts to stop the bleeding? The answer lies in a perfect storm of forces that transformed paradise into a cautionary tale about climate risk, insurance chaos, and political calculation. Between 2020 and 2022, Tampa Bay became the epicenter of American migration. New Yorkers, Californians, and Illinoisans poured into Hillsborough, Pinellas, Pasco, Manatee, and Sarasota counties at rates that stunned even the most optimistic developers. Wesley Chapel, Riverview, and Valrico saw entire subdivisions materialize almost overnight. Major builders like Lenner and D.R. Horton raced to meet what seemed like infinite demand, snapping up land on the metro's edges and fast-tracking permits. The numbers were staggering. By 2022, Tampa Bay's median home price had climbed to between $400,000 and $450,000. In downtown Tampa's Channelside district and along St. Petersburg's Beach Drive, luxury condos routinely sold for over $1 million. Days on market collapsed to single digits. Homes listed Monday morning received multiple offers by Friday afternoon, sometimes with buyers offering $50,000 or more over asking price just to secure a contract. The region's total property value surpassed $3 trillion in 2022, with much of it concentrated in coastal areas vulnerable to storm surge and flooding. Construction cranes became permanent fixtures across the landscape. The good times seemed endless, and the urgency to buy was palpable across every neighborhood from Brandon to Palm Harbor. But beneath the surface, the seeds of crisis were already taking root. Builders who had once struggled to meet deadlines now watched as their pipelines swelled with unsold inventory. In 2021, the median days on market for a single-family home in Hillsborough County was less than 10 days, one of the fastest sales paces in the country. By late 2022, active listings began climbing 35 to 40% year-over-year. The backlog of new construction hit the market just as buyer demand began to cool. Spec homes, houses built without buyers lined up, started piling up in outer suburbs. For the first time since the pandemic boom, for sale signs became a familiar sight on nearly every block in Tampa Bay's fastest-growing neighborhoods. Builders rolled out aggressive incentives to move inventory. Mortgage rate buydowns dropped advertised rates to 4.5 or 5%, well below prevailing rates. Appliance packages, closing cost credits, and price cuts of 10 to 15% became standard. Internal memos from local builders documented the scramble as sales teams were directed to move inventory at almost any cost. Then came the insurance apocalypse. By 2024, State Farm and Allstate stopped writing new homeowner policies across Tampa Bay, sending withdrawal notices to thousands of families. For many, the only option left was Citizens Property Insurance, Florida's insurer of last resort. By mid-2025, more than 200,000 Tampa Bay homes were covered by Citizens, a company already stretched thin by unprecedented exposure. Premiums exploded to levels that fundamentally changed the math of homeownership. The average annual cost for a typical single-family home in Tampa Bay reached $6,000 to $8,000. Along the coast in neighborhoods like Clearwater Beach and Harbor Island, homeowners faced bills exceeding $10,000 per year. These weren't just luxury properties. Any house near water saw premiums double or triple within just a few years. For buyers, the impact was immediate and devastating. A $350,000 home in Tampa now comes with a $7,000 annual insurance bill, adding nearly $600 to monthly mortgage payments before taxes or utilities. Lenders require proof of insurance to close on loans, and when buyers discover the true cost, many walk away before reaching the closing table. Mortgage underwriters began rejecting applications outright when insurance pushed total debt-to-income ratios above federal limits. A $500,000 home in Pinellas County now requires a $12,000 insurance quote in many cases. In Manatee and Sarasota, brokers describe deals collapsing at the last minute as insurance quotes come in higher than expected, pushing monthly payments out of reach for working families and retirees alike. Industry experts estimate that as much as a third of Tampa Bay buyers in 2025 withdrew from the market primarily because of insurance sticker shock. Citizens' premiums themselves run 30 to 50% higher than what private insurers charged before the exodus. The company's own spokesperson described the surge as unprecedented, warning that even citizens can't absorb unlimited risk. State law caps how much citizens can grow, and new rules force many homeowners to accept higher-cost private policies if they become available, even if the coverage is less comprehensive. The insurance crisis isn't just a background factor. It's become the defining barrier to homeownership in the region, reshaping demand, pricing, and the very future of the market. And as the market deteriorated throughout 2025, Governor Ron DeSantis found himself in an increasingly uncomfortable position. In March 2025, DeSantis publicly acknowledged what many had feared: a correction in Florida's real estate market couldn't be ruled out. Speaking in Miami, he suggested that while Florida had experienced more authentic demand than during the 2000s housing bubble, that demand was now firmly in the past tense. The admission sent shockwaves through real estate circles across the state. By August 2025, the governor's rhetoric had grown more pointed. At a press conference in Tampa's Hillsborough County Aviation Authority, DeSantis unleashed a rare critique of institutional investors and the forces pricing young people out of homeownership. "It's expensive, it's hard, especially for young people who are just starting," he told reporters, questioning whether America was becoming a nation of renters as firms like BlackRock bought up neighborhoods and converted them to rental properties. The governor's personal story colored his response. He and First Lady Casey DeSantis had purchased their first home 15 years earlier at the bottom of the market, when he was a Navy lieutenant living on a modest salary. "If we were starting out today," he said, "I don't think we would have been able to afford even a modest 1,800 square foot house. There's no way we'd be able to afford that." It was an unusually vulnerable admission from a governor known for projecting strength, and it revealed the depth of concern building in Tallahassee. DeSantis began proposing aggressive property tax relief, including $1,000 rebate checks and raising the homestead exemption to $500,000. He called for special legislative sessions focused on condominium regulation, insurance reform, and agricultural relief. The proposals were sweeping, but critics questioned whether they addressed the root causes of the crisis or merely offered political cover as the market continued to deteriorate. The irony wasn't lost on observers. DeSantis himself had sold his Ponte Vedra home in 2019 to avoid becoming a landlord, only to watch it appreciate by more than $200,000 in the following year. He had once celebrated such increases as proof that middle-class people doubled their wealth. Now, facing a reversal of fortune, he was scrambling to contain a crisis that threatened to define his legacy. When Hurricane Ian made landfall south of Tampa Bay in September 2022, it was technically a near miss for the metro. But the $112 billion in statewide damage sent an unmistakable message. Tampa Bay's luck could run out at any moment. Then came Hurricane Helene in September 2024 and Hurricane Milton just 2 weeks later in October 2024. Both storms battered Pinellas County, flooding St. Pete Beach, Treasure Island, and northeast St. Petersburg with up to 4 feet of water. The back-to-back storms didn't just damage homes. They fundamentally altered buyer psychology and market dynamics. Properties that had sold for $500,000 in 2022 now sat on the market at $425,000 with few takers. Some storm-damaged homes were selling at land value, dragging down average prices by up to 30% in the hardest-hit areas. The devastation was still visible months later, with entire neighborhoods awaiting repairs and insurance claims. The science behind Tampa Bay's vulnerability has always been clear to researchers. The bay's geography creates a natural funnel, channeling water from the Gulf of Mexico straight into the heart of the metro area. NOAA's storm surge models show that a direct hit from a Category 4 or 5 hurricane could push 15 to 20 feet of seawater into downtown Tampa, Channelside, Harbor Island, and the luxury towers lining Beach Drive in St. Petersburg. Entire neighborhoods like Davis Islands, Apollo Beach, Passage Key, and St. Pete Beach would be submerged under walls of water. Critical infrastructure sits squarely in the crosshairs. Tampa General Hospital, the region's main trauma center, is located on Davis Islands within the projected surge zone. Power plants, ports, and emergency services face similar threats. County planners have warned that evacuation routes, already limited by bridges and bottlenecks, would gridlock long before the water arrives. Climate scientists at the University of South Florida have described Tampa Bay as the most surge-vulnerable major metro in the United States. A place where the next hurricane could rewrite the map overnight. This actuarial reality now colors every conversation about risk and value. Insurers price policies with the worst-case scenario in mind. Buyers study flood maps before making offers. The market psychology has fundamentally shifted. For decades, the absence of a direct hurricane strike since 1921 had lulled many into complacency. But the events of 2024 shattered that illusion. Every new storm that approaches the Gulf now triggers anxiety among homeowners and renewed scrutiny from insurers. The threat of catastrophic storm surge is no longer theoretical. It's a central fact of life for anyone with property at stake in Tampa Bay. By summer 2025, the reversal was undeniable. Median home values across Tampa Bay had slid to around $362,000, erasing years of gains. In St. Petersburg, prices dropped 7.6% year-over-year, with some neighborhoods facing double-digit declines from their 2022 peaks. Sarasota's luxury market, once a magnet for wealthy buyers, saw homes that had fetched $500,000 at the peak struggling to attract offers above $425,000. Multiple data sources painted the same picture. CoreLogic identified Tampa as the #1 market in Florida with very high risk of price decline, assigning it a greater than 70% probability of further drops. Zillow's hottest housing markets ranking told the story most dramatically. Tampa plummeted 19 spots in a single year, falling from 10th to 29th nationally, one of the largest drops in the country. The numbers on the ground were even more sobering. Hillsborough County's inventory ballooned by nearly 40% year-over-year. Pinellas County saw 5,600 homes for sale, the highest level in 7 to 8 years. In Lee County, 9,600 homes sat on the market. Lakeland, previously insulated from coastal concerns, now had 4,800 homes for sale compared to just 3,000 before the pandemic. The luxury end of the market was in freefall. $2 and $3 million waterfront homes lingered unsold for months, with sellers slashing prices by $50,000 or even $100,000 just to spark interest. MLS data showed luxury listings sitting for over 6 months, a sharp contrast to the bidding wars of the pandemic era. The entire region was awash in inventory, pushing Tampa Bay firmly into buyer's market territory. Builders who had thrived in the frenzy now found themselves with rows of empty spec houses in Riverview and Wesley Chapel. To move product, they continued offering mortgage rate buydowns at 4.5 or 5% through and appliance packages and cut asking prices by 10 to 15%. These incentives, once unthinkable, became standard as the market softened. Transaction failures mounted. Appraisals routinely came in below contract prices, forcing buyers and sellers back to the negotiating table or scuttling deals entirely. Mortgage lenders, wary of falling values, tightened standards and sometimes refused to finance homes that couldn't appraise. The average time a home spent on the market soared past 40 days, a stark change from the single-digit days seen just a few years earlier. The feverish pace of 2021 had vanished. Bidding wars disappeared, replaced by price cuts and anxious sellers watching their listings grow stale. Condo buildings across Tampa Bay are at the center of a crisis that goes far beyond falling prices. In Clearwater Beach, units that sold for $800,000 in 2022 now linger on the market at $600,000 with few buyers willing to take on the risk. Board meeting minutes from towers like Seaglass record emergency sessions where owners debate special assessments of $75,000 per unit, money needed just to meet new reserve requirements and keep insurance in place. For some, the numbers are impossible. Owners unable to pay assessments are forced to list at a loss or walk away entirely, turning keys over to banks or letting units slip into bankruptcy court. The president of a major St. Petersburg condo association describes the mood as one of resignation and fear. Insurance premiums have tripled, pushing HOA fees from $400 to over $800 a month. Lenders have responded by freezing out buildings that can't prove adequate reserves or secure coverage. FHA and VA loans are now unavailable for most Tampa Bay condos, effectively shutting out first-time buyers and veterans. Deals collapse at the last minute as financing falls through, and empty units pile up in buildings that once had waiting lists. Wall Street investors, once eager to buy up blocks of condos and single-family homes, are now in retreat. Firms that bought thousands of properties during the boom are unloading assets in bulk, often at steep discounts. Local brokers track entire portfolios hitting the market, driving prices down further and flooding neighborhoods with price-reduced signs. Analysts warn that if values drop another 15 to 20%, even more owners will owe more on their mortgages than their homes are worth, raising the risk of strategic defaults. The fallout is rippling into public finances. Hillsborough County's budget director faces a projected $70 million shortfall as property tax revenues shrink. School districts and city services in Pinellas and Sarasota brace for cuts. At a recent Senate Budget Committee hearing, state officials warned that Tampa Bay's fiscal exposure now rivals or exceeds the 2008 crash. Only this time, the crisis is fueled by insurance and climate risk, not just speculation. The calls for intervention grow louder, with experts urging reforms to insurance markets, stricter reserve rules for condos, and emergency support for local budgets before the damage becomes irreversible. But Governor DeSantis faces a political tightrope. Any significant intervention requires legislative support, funding, and time, all while the market continues to deteriorate beneath his feet. In 2022, Tampa Bay's median home price peaked at $450,000, fueled by record migration and a historic construction boom. Just 3 years later, the region faces a dramatic reversal. Inventory is up over 35% in Hillsborough County. Luxury condos sit unsold, and prices in areas like St. Petersburg and Clearwater have fallen by double digits. Insurance premiums averaging $6,000 to $8,000 and surpassing $10,000 along the coast have driven 30 to 40% of buyers out of the market. Insurers like State Farm and Allstate have withdrawn, forcing over 200,000 properties onto Citizens, the state's last resort insurer. Despite NOAA models warning of 15 to 20 feet of storm surge risk, and despite back-to-back hurricanes in 2024 that flooded entire neighborhoods, the long-term impact of climate threats remains uncertain. What's clear is that the crash has strained local budgets, triggered job losses, and left many recent buyers in financial distress.